Hello and welcome to Bite Size Newscast number 11. Today's episode will feature three topics in depth. Now, the first topic we'll have a look at is the new IPO alternative that was recently announced by the SEC. Now, this is a pretty exciting new addition to the IPO space, and I think we'll see a lot of this in the near future. We'll have a look at farming, so more specifically, innovation in the farming space. Now, I truly believe that this space is gonna radically change in the upcoming years. And I just want to introduce you guys to some of the major innovations in this space. Now, finally, it's been a good few weeks since the cancelled Ant Group IPO. And now that the dust is settled, I kind of want to jump into some of the news that's come out recently. And I also think I have a pretty good idea of where this is going in the near future. Now, before we jump in, some quick housekeeping. If you like the content, have any questions, please leave a comment down below. And please don't forget to hit the subscribe button. This way you stay up to date with most of the important economic developments as they happen in the crypto and wider economic space. Now, also note that the following is not financial advice, it is strictly educational. So let's jump right in. So the SEC approves a new plan for an IPO alternative. Right, and before I jump into this, what this alternative is, I actually want to go through what the normal IPO process is. And we'll take Airbnb as an example. Now, IPOs have been incredibly popular in the last 2 years and incredibly successful, right? You have Airbnb, 3.5 billion, DoorDash, 3.3 billion, Snowflake, 3.3 billion. And what kind of makes these similar is that all of them went up a lot during the first days of trading. Now, the reason this is significant is because, contrary to what you might think, if a company IPOs, right, they don't actually get the price that you see here, right? Instead, they do a deal with a group called underwriters. Now, underwriters are basically an investment fund or a large bank which vows to buy all the stocks from Airbnb. So Airbnb issued for 51.5 million shares to the public at $68 each. And these were all bought up by large banks, right? Now, as you can see here, the first day of listing, it didn't list for $68, it listed for $144. So what happened to this gap? What happened to that $76 gap? Well, that goes to the underwriters. They essentially bought these shares from Airbnb and then flipped them on the open market. They make a tidy, very quick profit. And once again, let me reiterate, this money doesn't actually go to Airbnb, right? Now, the alternative to this kind of listing, right, this is the classic IPO listing, and the alternative to this form of listing is a direct listing. Now, a direct listing, also known as a selling shareholder direct floor listing, is, how would I best explain this? Instead of a company issuing new shares, they just register at the stock market and allow people who own the shares already to trade them. And an excellent example is Palantir. So when Palantir went public, they did not issue any new shares whatsoever, right? All they did was register at the New York Stock Exchange and allowed people who already had shares in the company to trade them on an open market, right? If you're a healthy company, this is a good move. You don't need any money, but you allow people who have your stock to trade it on an open market. And the benefit to an open market is that these can be traded anytime, anytime, the market's open, obviously, and the price discovery is in real time. So if you are an owner of this stock, you know how much it's worth on a day-to-day basis. So we have these two alternatives, right? Direct listing, company doesn't issue new stock, and an IPO listing where a company does a deal with underwriters and they issue a whole bunch of shares, and that gives them a certain amount of money. So I hear you ask, why is there no middle ground? Excellent question. That's where this article comes from. So the SEC approves a new IPO alternative, which is kind of like a middle ground. Now, this type of listing is called a primary direct floor listing, And how it basically works is instead of underwriters, it's the company who says we will share X amount of shares and it will start at Y price. Now, the total number of shares is predetermined and also the initial listing price is predetermined. But as you can imagine, it starts at that price. So let's say you have Airbnb, right? They start their listing at $68. A lot of people want to buy at $68. Then you can push the price up a little bit. So the next bunch of shares are issued at $75. And this keeps going, right? And the benefit is these companies get all that money. There's no underwriters, there's no middleman there. It's just a direct listing of new shares that the value of that goes to the company, which they can invest as they wanted to, right? Now, what Airbnb basically did at $68 is they sold at half price. So they could have actually made twice the money from their IPO listing, right? And use that money to invest. Now, in my opinion, the direct listing for companies is definitely a move in the right direction. Now, needless to say, with a fair bit of caution, that it opens the door to poorly managed or structured companies to do an IPO because the one role that underwriters did have is they kind of did some vetting. You know, if a company was terrible, they wouldn't touch it, right? And now any company can list. Well, not any company. There's some caveats to it. I'll put the whole SEC thing down below in the description. So if you want to have a deep dive and have a look at that, I definitely recommend it. It's a bit difficult to read, but if you give it one or two goes, then you'll be fine. Now, for you, what you want to take away from this is that if a company does one of these new forms of IPO listings, you want to do your due diligence. You want to take some time and figure out what this company is all about before you invest in them because it may be kind of like Nikola, you know? A company that's made no money, no viable products, and a scammy owner. So if you invest in one of these, you're going to lose your money. So be careful with that. So do your research before investing in an IPO and remember that finding out the motivations for the listing is one of the first important steps to doing a good due diligence. I wish you guys all the best with the IPOs coming up in 2021. It's going to be a very exciting year, I'll tell you that much. I'll keep you guys posted, by the way. If there's any good news on this, I'll definitely make a video on it. Make no mistake about it. I'm definitely not a farmer, but this news has kind of got me excited. Not gonna lie. You know, farming has pretty much been around since the dawn of civilization, and in essence, it hasn't really changed, right? You take up a lot of land, you prepare it, you plant seeds, maintain your crops, and eventually you harvest. Now, over the years, you do have some radical improvements, like tractors, herbicides, crop rotation, but the essence of the matter kind of stays the same, right? Now, at the same time, the world population has been growing fairly exponentially, meaning that more and more land has been used for farming. And, you can see the evidence of this all around you. Like, there's literally farmland everywhere. And on top of that, farming is seasonal and geographical, meaning that most crops cannot be grown throughout the year or anywhere in the world, basically. So, the first way of coping with this that we figured out is greenhouses, right? So, greenhouses make it possible to keep a firm grasp on the actual environment within and make it possible to grow crops year round, right? So, that was the first step up from the classic prepare your land, plant seeds, etc., right? Now, greenhouses still take up a lot of space, right? And they still take up a lot of resources. They're not as efficient as they can. It's just an isolated plot of land, basically. But there is a pretty cool. This scrolling in this website is this is one scroll wheel. This is no bueno. Anyway, sorry. Um, Getting back on topic, there is a major innovation that has come around in the last 4 or 5 years that is really starting to pick up now, and that's vertical farming. Now, vertical farming is different in the sense that it doesn't require sunlight. It's all LEDs. And that means the absolute acreage required grow, to grow crops shrinks dramatically. And this comes with a couple of pretty cool benefits. I mean, first and foremost, it's possible to grow crops in densely populated areas. That's pretty cool. And the benefit is that it puts farming in the heart of a major distribution hub and customer bases. Now, this changes everything in terms of shipping, produce freshness, and also the types and ages of people that can be employed, right? There's a lot of different types of people in the city that you don't get in the countryside. Typically, young people, for example, large numbers of young people, skilled or unskilled workers, like a lot of people, right? And on top of the innovation of vertical farming, um, learning based algorithms and AI have been making an entry into farming. And given the fact that a lot of these vertical farms are built from the ground up, they are built from the ground up with the idea of AI and learning based algorithms playing a central role. Now, what this means is that these vertical farms are built from the ground up with this idea. They're riddled with sensors, there's computers everywhere, and the whole aim of this building, this vertical farm, is to learn how to get the most from each yield. Now, in other words, this trial and error method of old school farming has basically given way to learning based algorithms that promise better results faster. Now, also because vertical farming happens in this strictly controlled environment, not only do crops improve dramatically, but the amount of water required drops by a staggering like 95%, which is insane. And also, there's no need for harmful pesticides, right? Now, another thing that sets vertical farming apart, and especially why it's been given such a promising role in the last 4 or 5 years, is that it stands to benefit more from technological innovation than other types of farming. Now, for example, improvements in energy consuming LED lights, making them less energy consuming, or more effective solar panels and improvements in AI will disproportionately benefit vertical farming because that is the basis, the essential element to how they function, right? Now, obviously, not all produce can be grown in a vertical farm. You can imagine crops that take a lot of height to grow, such as corn. They're a lot less suitable for vertical farming, right? Because as you can see from this image here, you can imagine this will not be good for, I think at least yet. Maybe they'll figure it out somewhere down the line. But this is typically for lettuce and spinach and herbs and all these lower stalks, right? Now, there is still place for regular farming because you need corn, you need tall crops, right? And the cool thing is, regular farming is also up for some major, major improvements. Now, as you probably know, herbicides and pesticides are incredibly common in farming, right? They're incredibly prevalent. I'll look up the picture in a second. They're incredibly prevalent. And especially herbicides, they've been linked to anything from a rash or even death, right? And herbicides, they end up in a water supply, they damage unwanted plants, not on the farming land, but also far beyond the farming land, and they're very costly. You know, Up to 30% of the cost of farming goes into spraying herbicides. Now, this is actually poised to change with the advent of robotics, right? I had a link somewhere down below. I can't find it right now. Let me actually pause and look it up for you. Hold on, one moment. There we go, found it. So as you can see, these robots have these blades at the bottom, and what they do is they go around, they identify any crop, which is our crop, any plant which is not a crop, and they cut it down, right? So this avoids having to spray all these herbicides, damaging the water, costing you a ton of money, and instead these robots work day in, day out, and cut down the plants, the unwanted plants, right? Now, what should be noted is that robotics is pretty expensive, and it will take some time before we see a host of them plodding around every single piece of land, cutting down all the unwanted plants, etc. But it stands to reason that one day robots will become a very important component of regular farming. Now, this mightn't happen overnight, but like, remember solar panels? Nobody wanted solar panels. And then all of a sudden came this moment where having solar panels was cheaper than actually buying the electricity. And at that moment, that little nicky, that little cranny, that little happening, that moment in time, that changes everything, because after that it's exponential growth. And you're going to see the same with robotics. They're not going to be as efficient at first. They're not going to be they're not going to be cheaper than herbicides, but at some point they're going to get so efficient and so cheap, herbicides are going out the window. Now, with putting everything together in the grand scheme of things, it doesn't take much to imagine that farming in the upcoming 20 years is going to radically change. In my opinion, farming is actually one of the most stressful things to Mother Earth right now. Just imagine the amount of resources, time, and effort and land that goes into feeding humanity. And try and shrink that number. The amount of benefit that would produce is staggering. Now, for those of you who are interested in the space, I would keep an eye out for major breakthroughs in the robotic space, cost pressing breakthroughs or AI breakthroughs, something that will tip the scale. Because currently the price and benefits of robotic is just simply not good enough. And also keep an eye out for companies that are investing heavily in vertical farming space, right? Especially the infrastructure around it. Now, this would be of major interest to anyone who's looking to gain exposure to vertical farming. And oh yeah, for those of you who want to learn more about this, I highly recommend checking out the company Plenty. I put a link to their website in the description below. So once again, I think vertical farming is definitely going to take off. I think robotics in farming is going to take off. AI in farming is going to take off. And I'm going to go out on a wing here and say that farming in the next 20 years is going to be more exciting than the last 2000. My homie Jack Ma, in trouble. Seriously though, he's a pretty cool dude. I read his autobiography and I highly recommend it. It's He comes from humble beginnings and he worked his way up through hard work, effort, and just always raising the bar and having an innovative mind too. No jokes. So the reason I want to get into this is because in a previous video we kind of had a deep dive into this whole Jack Ma versus China Ant Group, this whole story, right? So just a short recap. Jack Ma, founder of Alibaba, has a company called Alipay, and this whole thing is rolled up into this thing called the Ant Group. Now, the Ant Group was going to have the biggest IPO ever, like 300, 400 billion dollars of value. It's staggering. And a couple of days before this IPO was supposed to happen, Jack Ma had a big mouth. He ran his mouth. He basically said that he was going to disrupt everything, and China has pawn shop mentality, and etc. etc. Now, this pissed off the president of China tremendously, right? This was the first story, and this was the reason this whole Ant Group IPO was pulled off. Now, as the dust has kind of settled and we kind of know the true story behind all this debacle, things look a little bit different. It wasn't so much what he said that pissed off the president of China, but it was what they were going to do that scared the president of China, that scared the Chinese government, right? And what the Ant Group actually does is they offer a complete and utter bank of everything, right? Whether you're talking loans, savings, mortgages, payments, just everything surrounding finance, roll into one ball, roll into one app, roll into one service. Now, as you can imagine, this puts an incredible amount of power into someone or something that may run contrary to the wants and needs of a communist government, right? So on top of Jack Ma talking about shit about the Chinese government, saying they had a pawn shop mentality that didn't favor innovation and growth, And then coupled with the fact that this IPO, this company was just going to have way too much power in China, the government of China just called a halt to it. Now, the main problem the Chinese government had with the Ant Group is the fact that the Ant Group offers credit, insurance, wealth managers all rolled into one, right? And it's too much power, right? The result of this is that the Chinese government seems to want to chop up the Ant Group in multiple entities. At least that's what this report is saying right here, right? Now, personally, I don't believe this. I don't believe this. But what's being said here is that the Ant Group is setting up a working group to cooperate with the Chinese government to seek out a plan that's considered a win-win for the Chinese government, the consumers, Ant Group, and if this is truly the case, then I'll keep you guys updated on this. But I don't think so. Um, so what else we know right now for a fact? Well, Jack Ma hasn't left China or hasn't been seen in public for a while. This means he understands he's in trouble, and he's going to lay low for a while and just focus on the task at hand, right? Defending himself. And we also learned that the Chinese government is able to move very quickly and very decisively, and they literally introduced a fintech law in a matter of 2 days to stop the IPO on legal grounds. This we all know for a fact, right? But now what's going to happen? And I personally believe that the Ant Group is just, at least to some extent, if not all the way, it's going to be nationalized, right? The Ant Group, you heard it here first, Ant Group nationalized. Now, most of us don't know what the Ant Group or Alipay are because we don't use them on a day-to-day basis, but you have to imagine that with Alipay, which is Ant Group's app, you can pay people, store money in a checking account, make investments, buy insurance, receive financing, get a credit card, make payments, and even hail a taxi, right? I made a list, just so you know. Um, and you can also use the app to make payments in restaurants or businesses for your QR codes. Now, in essence, this is a one-stop shop for everything finance. Now, if you couple this with the fact that the Chinese have actually been actively testing a digital version of their currency, it stands to reason that a fully or partially nationalized Ant Group, coupled with an operational digital currency, can be an exceptionally efficient tool for the Chinese government to administer fiscal policy at every level. And I simply don't think the Chinese government will overlook this. And that's why I think that the Ant Group, if not all of it, but most of it, is going to be nationalized. Now, I do fully anticipate to keep you guys posted on this because I find this to be exceptionally exciting, exceptionally interesting because it lets you know where the Chinese are going. Like, how are they going to treat these incredibly successful companies that are invariably going to control a lot of money and power? What are they going to do with them? We're going to know a lot about China from this, and it's going to be very interesting to keep an eye out for this. So I'll make sure to keep you guys updated. Well, once again, here it is first, nationalized. Now for the quick-fire summary. The New York Stock Exchange has allowed for a new form of direct listing that allows companies themselves to do direct listing without the use of an underwriter. Now, this overall makes the listing process much more attractive for the companies themselves because it allows them to raise more capital. Lesson for you guys, remember to stay wary. Look at what the listing motivations are for companies, right? Because the form of direct listing, the potential for malicious or outright scams is definitely increased. All right, we also had a look at the what I would consider very exciting world of next-gen farming, as crazy as that might sound. We are truly on the cusp of major changes in farming as we know it. Vertical farming is one of the fastest growing sectors in agriculture. It stands to benefit greatly from the technological innovation in the coming years. And on top of that, with the advent of AI and robotics, it stands to reason that we'll see at least robotics take over a lion's share of the work on regular farmlands. Overall, this will greatly improve yield, lower the demand of land, and increase or decrease even the amount of herbicides used in the process of growing. Finally, now that this is settled, we had a look at this whole Ant Group debacle, and it has become clear that the Ant Group simply had too much power and control in the fiscal arena for the Chinese government's liking. Right now, with this in mind, I believe the Ant Group will be partially or fully nationalized, and I predict that later this year we'll see another IPO for the Ant Group, but it will not be the same company as the one poised to go public late last year. Anyways, that's it for newscast number 11, guys. Thanks so much for listening. I hope you enjoyed the content. Please subscribe, and I'll see you next time. Bye!